In my last video, I mentioned how it's getting harder and harder to find real bargains in today's market. So I decided to take a closer look at what some of the greatest investors are buying right now. And when I checked Bill Ackman's Pershing Square Capital's second quarter 2025 portfolio, I noticed something interesting. There weren't many changes, but there was one new position, and it instantly became his fourth largest holding, making up nearly 10% of his entire portfolio. And that stock is none other than the e-commerce and tech giant Amazon. This made me wonder, is Bill Ackman seeing something the rest of the market is missing? I realized I haven't analyzed Amazon in quite some time, so I decided it's time to dig in. In today's video, we'll do a brief overview of Amazon and check its latest financial report. We will break down Amazon's financials to see if there's any red flags, analyze its intrinsic value, and see if it deserves a spot in a value investor's portfolio today. Now, if you enjoy this kind of content, consider supporting the channel by clicking the like and subscribe buttons. And without further ado, onto the video. Amazon is one of the so-called Magnificent Seven, the group that also includes Apple, Microsoft, Alphabet, Tesla, Nvidia, and Meta platforms. And over the past 5 years, these tech giants have delivered massive returns, with Nvidia leading the group, bringing in an incredible almost 1,300% return, and all of the others more than doubling. But there's one that hasn't kept up. And you guessed it, it's Amazon. Its stock price grew only 37% in the last 5 years, roughly 6% per year. Not exactly exciting compared to the others, right? However, while the stock price lagged, the business itself has never been stronger. Amazon now generates the second largest revenue in the world, just behind Walmart, and it's likely to take the #1 spot in the near future. In the second quarter of fiscal year 2025, Amazon reported $167 billion in revenue, up 13% year over year, and net income jumped from $13.5 billion to $18.2 billion. Cash flow also rose sharply, showing that the company's profitability continues to improve. Now, to understand what drives this growth, we need to look at Amazon's three main segments: North America, International, and Amazon Web Services. In North America, which includes its core e-commerce operations, revenue climbed to $100 billion, up 11% from last year. The advertising and subscriptions were the key growth drivers here. The International segment also performed well, with revenue up 16% and operating profits rising from $273 million to $1.5 billion. But the star of the show is still Amazon Web Services. AWS revenue hit almost $31 billion, up over 17% year over year. It currently makes up only 18% of total sales, but contributes over half of Amazon's total profits. And to stay ahead, Amazon continues to invest heavily, with over $30 billion recently committed to expanding its cloud infrastructure in the US, and more than $100 billion expected in total spending this year. Much of it is focused on AI data centers. So while Amazon's stock hasn't skyrocketed like Nvidia or the others from the Magnificent Seven, the company behind it remains a powerful growth engine, as it's quietly building value for the long term. But as value investors, it's important for us to look behind the headlines. So now let's go through Amazon's key financials to check for any red flags or weaknesses. So Amazon is currently trading at $225, which is fairly close to its all-time high of around $240. Their current price-to-earnings ratio is 34, with a forward PE of 32, which is quite high, but considering they're growing at fast rates, it might be reasonable. Now, considering it's Amazon, the return on invested capital is fairly low at 15%, but it's pushed down by the e-commerce segment. If we would look at the ROIC for AWS, it would be much higher. They also have low debt with a net debt to EBITDA ratio at 0.4, which means the company is doing fairly well and there's low risk for bankruptcy. Now, this is a chart of Amazon's revenue over the past 10 years, and as you can see, it's growing really steadily, going from $136 billion in 2016 all the way up to $638 billion last year, growing more than 4 times along the way. Now, this is their net income, and despite this loss in 2022, Amazon's net income has been growing rapidly over the last 10 years, reaching almost $60 billion last year. Now let's compare it to free cash flow. Free cash flow has also been growing steadily. While there's a big difference in net income and cash flow last year, it's most likely due to large investments that Amazon is consistently making into their future. And despite that, we still see steady growth over the last 10 years. One thing I'm not the biggest fan in Amazon's financials is their shares outstanding. Over the last 10 years, they have been issuing shares fairly consistently, increasing the amount of shares outstanding by over 10% and diluting shareholders along the way. While these numbers aren't terrible, it is something to keep in mind. Now this is a graph of their gross margins, and to be honest, it's the thing I like most about Amazon. In 2016, their gross margins were at around 35%, and they were growing steadily pretty much every year, reaching almost 50% last year. What this means is that Amazon is extracting more profits from the same amount of revenue, and is an indicator of a strong company. Now, when it comes to analyst estimates, analysts predict Amazon's revenue to grow from $638 billion all the way up to over $1 trillion, which is more than a 10% annualized growth rate. Now, when it comes to EPS, analysts paint an even better picture for Amazon, growing from $5.5 last year all the way up to $13 in the year 2029, which is close to 20% annually. So overall, Amazon's financials look solid. Steady growth, improving margins, and a healthy balance sheet. Even with some share dilution, nothing looks alarming. But the key question is, does the current stock price actually reflect the strength? Let's run the numbers in my intrinsic value calculator and see if Amazon might still be undervalued today. So in the last 12 months, Amazon did $6.56 in EPS. And let's say that the analysts are right, and Amazon will grow its EPS at close to 20% annually for the next 5 years. So let's give them an 18% growth rate. And let's say that they will slow down for the 5 years after that and only grow at 12%. And as you can see, with these assumptions, with a 15 terminal multiple for a 10% annualized return, Amazon seems pretty much fairly priced, as you could pay $226 for Amazon today when it's trading at $225. And in my opinion, 15% terminal multiple is too low for a company of this dominance and such growth. So let's give them a 20 terminal multiple, which could still be fairly conservative. Suddenly, for a 10% annualized return over the next decade, the current stock price seems to be fairly undervalued, as you could pay around $272 for Amazon stock today to receive a 10% return. In fact, I just adjusted the numbers, and it seems like if these assumptions come true, you could expect closer to 12% annualized returns over the next decade. Now, I just adjusted the numbers again, and if Amazon would be trading at 25 terminal multiple, it seems like you could expect around 14% annualized returns over the next decade. So to wrap things up, Amazon looks incredibly strong financially. This is a company that isn't going anywhere anytime soon. And honestly, it's one I would love to own long term. Based on my analysis, it looks capable of delivering solid double-digit returns over the next decade. That said, I'm not buying just yet. I would prefer to wait for a better entry point. Ideally, I would like to see the stock price drop below $200. Now you might be thinking, $200, it's never going back there. And you might be right, but remember, it traded at $160 just a few months ago. And I do not mind waiting. After all, that's what value investing is all about. Patience and discipline. That said, I do not think that you would do bad even investing at the current price. Now, if you would like to see other opportunities that I do think are undervalued right now, I have just released a video covering my top 2 picks for October. 2 companies that I believe offer good risk-reward potential at today's price. You should be able to see the video somewhere on the screen or in the description down below. Now, if you enjoyed the video, consider clicking the subscribe and like buttons. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.